So, as I mentioned in the email, I wanted to give you a quick heads up about what in the world is going on with the world of insurance. And it's not a particular topic that most people think about. And so, I want to give you a little context as to why we're seeing what we're seeing in the state of California and really in many of these states across the country. So, what is contributing to these unprecedented changes? There are really four main factors that we're going to cover. The first one is reinsurance. Then you have claims, both frequency and amounts. You have inflation, and then you have rate approvals not going through. And so we'll talk about what all those things mean and how they're impacting you. But let's start with reinsurance. Essentially, this is insurance for insurance companies, and it's really just used for more large disaster type situations. So things like wildfires and hurricanes and stuff like that. Well, these contracts are renegotiated every 10 years, and they just got renegotiated. And so if you look at the past 10 years, it's really been more natural disasters than ever before in history in terms of not only frequency, but also severity. And that means that reinsurance companies have been used more often. And just like any sort of claims or insurance policy, the more you use it, the more expensive it gets in the long run. And so that's what we're seeing as fact number one. Factor number two is claims frequency and severity. And so not only with these large loss claims, such as wildfires, but more day-to-day claims, your car accidents, your home insurance issues, your all that stuff has been happening more often, and the amounts that have been paid out have been going up. And this isn't just, your fender benders. These are really related to medical bills, to lawsuits, and those factors are driving up claims costs significantly for companies. The third factor is inflation. And so just like it's been affecting everything throughout the country over the past few years, insurance is no different because we have to pay out in terms of cost to rebuild a house or cost to replace a car. All these different things are impacted by inflation and impact claims that are paid out. So insurance is no different. Now, all of these culminate with the last factor, the rate approval. And so a lot of people don't realize that insurance rates are actually approved by the state of California. They have the Department of Insurance, and the Department of Insurance actually approves rates or declines them. So essentially what they do, they make sure an insurance company isn't making too much money and that they're remaining profitable enough to stay in business. And really since COVID happened in the state of California, they have shut down rate increases. So if a company was losing money, it didn't matter. They weren't going to get the approval they needed to raise rates in order to offset the expenses. And there's actually a number that's associated with this. It's thinking like you receive $1 in premium, how much money is paid out in terms of cost of claims, operating costs for the business, stuff like that. And so a vast majority of companies, actually pretty much every company in the state of California, has been losing 10, 20, 30, even 60 cents for every dollar they take in. And that is just unsustainable for business. And so companies have taken the drastic measure to leave the state of California with the knowledge they're probably not going to be able to come back. And if they can, it's going to be a very long time. And non-renew all their clients. Companies have gone to that extreme. Many other companies have decided to stop taking new clients for the foreseeable future. It's probably going to be through the remainder of 2023. And then the companies that are still taking on new clients are doing so very cautiously. They're putting through stringent guidelines, steps that need to be taken, certain billings that you need to do, all in an effort to go back to profitability. And so just what happened recently is the state of California Department of Insurance has started approving these rate increases. And what is normal is 5 to 10% because that's what they can approve without going to a third-party board and really pitch the need to the board and have the board give approval. And so that's what we normally see. This is not normal. And what we are seeing is rate approvals in the 30s, 40s. I've seen as high as over 60% rate increase approvals. And so that doesn't mean that's what you're going to see personally, but that is happening out there. And as a result, I wanted to make you aware that is what the marketplace is looking like. So as these changes happen, as things are impacting you specifically, we're going to be reaching out so that we can discuss it, go through available options, and then from there you can make the decision that is best for you and your family moving forward. So if you have any questions on this, it's a very changing, constantly changing environment, extremely interesting to me, but not to everybody. And so the downside is obviously that it's going to be impacting everybody in a very significant way. And we're here to make sure that we can help you through that process. So this is really just a foreshadowing of things to come. And as you are being impacted individually, we'll be reaching out so that we can help present any solutions that are available. Take care.